Peace. This video is brought to you by the red, the black, and the bags and bags and bags of green. That's right, y'all. Here at the Absolute Boss Collective, we're going to tackle volatility today. The VIX. All right. If you're new to the channel, consider subscribing. Turn on your post notifications. Comment on the videos. You know, sometimes I might speak, you might not fully understand what I am bringing to you. Leave it in the comments below and I will get right back at you. Okay? So this video is about the VIX. In 1993, that's for all you Naughty by Nature fans out there, the Chicago Board Options Exchange, the CBOE, introduced the VIX, which is a fear gauge. Okay, it measures how many people are shook. Shout out to Mobb Deep, shook ones. Okay, it measures how many people want to protect themselves. Okay, so the VIX represents market expectations for relative strength of near-term price changes of the SPX. Okay, the VIX has a formula. It looks a little something like this. This VIX formula is derived from the index options with near-term expiration dates. So if you guys know about stock options, okay, you can have options on a stock, let's say NVIDIA, ticker symbol NVDA. You could, if you're bullish and you think the price is going to go up, you buy a call. If you're bearish and you think the price is going to go down, you will buy a put. You can do the same thing on a stock index. Okay, check out my video, the Index Flex. I go over all of the different indexes. But right now, we're talking about the VIX, and the VIX measures what's going on with the SPX, the SPY index. All right. So the VIX takes as an input the market prices of calls and puts on the SPX index for near-term options with more than 23 days until expiration and next-term options with less than 37 days until expiration. And it also includes risk-free U.S. Treasury bill interest rates. Okay. Now, I know that's a lot of mumbo jumbo, so let me break it down. With a stock option, right, you have an expiration date, okay? So typically you look at options expire on the third Friday of every week. Every month, pardon yourself, right? So what that is saying is this VIX formula is taking into consideration the options on the SPX index that are going to be expiring in that current month. So like right now, we're in December. We just had OpX, which was crazy. It was quad witching. If you don't know what quad witching is, go look that up or leave it in the comments below and I'll break that down for you. Okay, we just had that on the Knowledge Guard Day, the 17th. Friday was quad witching. So you had stock options expiring, you had index options expiring, you had the quarterly options expiring, okay? So it was crazy on Friday. If you don't know, go check the stats. It was crazy, okay? So now let's say that VIX structure is going to be dealing with, you know, like if we were looking at this on Thursday, the 16th, if we were looking at this on Thursday, we would have been, that VIX structure would have been dealing with Friday's expiration and the next cycle, which the next cycle would be January. Okay, so that computation is dealing with those two dates. Okay, the goal is to estimate the implied volatility of the SPX 500 at an average expiration of 30 days. Okay, so in a nutshell, that's it. So a lot of times when we're looking at the VIX and we're looking at it rise, It's dealing with how many people are purchasing put options on the SPX. And it's, you've seen that formula. So it's all calculated. And we look at this on a rolling 30-day basis, so to speak, roughly 30-day basis. Okay. So when you're dealing with options, right? This is how the VIX is going to tie in. When you're dealing with options, if we are in an environment with a high volatility, okay, what you pay, which is called a premium, is going to be higher if there's a high VIX. Meaning, if a lot of people are concerned, a lot of people are shook about what's going on in the market and they want to protect themselves and they're buying puts, then we're going to have a higher VIX, whereby making it more expensive for you to go out and buy puts and calls. Also, it's going to affect all of that. Okay, check out my video when I talk about the option Greeks. So you got to deal with all those option Greeks, and you also have to deal with volatility. So if volatility is high, that may not be the best time for you to purchase your options. Remember, you want to buy low, sell high. Okay? I thought it would be great for us to go and look at the VIX charts. Okay. Now, VIX is different because you cannot trade VIX outright. You can trade derivatives on the VIX. Okay. But you cannot trade the VIX outright. So let me break that down. You can trade the SPX by getting index options on the SPX. You can trade options that are related to the SPX by trading the SPY stock options. Okay. Now with VIX, you cannot trade that index directly. There are some derivatives that you can use to try and capture the moves of the VIX, whether you long the VIX or you short the VIX. And what's really bugged out about it is then you'll be buying a derivative, because an option is a derivative. So you'd be buying a derivative on a derivative, which is the VIX itself. And this is why sometimes that doesn't really work out so well. And I'm almost an expert in dealing with that, because when I got started in this game, I lost a lot of money trading the VIX. Okay. If you don't know what you're doing, that's not something that you want to just play with. Okay. Now, that said, let's go forward and look at this punk ass VIX and deal with the chart, and you will see why it is not such a good thing to hold in your portfolio for an exorbitant amount of time. Usually it's like 1 or 2 days if you want to just capture moves there. If you want to try to get into that, capture some of that, leave a comment down below. Okay. So first we have the 1-day chart of the VIX. Okay, check out how it is moving. Okay, remember, if you check out my video, how to read a stock chart, you should be looking for stocks that go lower left to upper right. So with that in mind, keep looking at these charts and see what you see. Let's look at this 5-day chart of the VIX. It reminds me of this lyric from the Nas Locomotive song, where he said, I started out broke, got rich, lost paper, then made it back, like Trump being up, down, up. Okay, look at that 5-day. Now let's look at the 1-month chart. Okay, things have been getting a little crazy. We got a lot of things going on with the Fed, and they're tightening, and the prospect of 3 interest raises next year. Okay, and tapering by $30 billion every month. Okay, this is all kind of crazy stuff. We got tax loss harvesting going on. We got a lot of things that's jumping off in the market right now. So over this last month, look at this chart. Okay, let's look at the 6 months. Okay, let's look at the 1 year, 5 years, You like that? You like that? All right. Now let's look at the max chart. What do you see with that max chart? Okay. This is a constantly decaying instrument. Okay. But it's a good way to measure the fear in the market. Okay. Okay. There's going to be links in the description below. So if you guys want to get nerdy with it, you can look at some of those links and you'll be able to see how deep the rabbit hole goes. On February 24th, 2006, it became possible to trade options on the VIX. That's the first time. Okay. October 24th, 2008, the VIX reached an intraday high of 89.53. November 21st, 2008, VIX closed at a record of 80.74. Okay, that's high fear right there. On February 5th, 2018, VIX closed at 37.32, up 103.99% from the previous close. Okay. On November 9th, 2020, the VIX hit 62.12, the highest level since the 2008 financial crisis due to a combination of the Russia-Saudi Arabia oil price war and the COVID-19 pandemic. During the COVID-19 pandemic, on March 12th, 2020, the VIX hit and closed at 75.47, okay? Just, check out those links below if you want to be a real nerd with it. But basically, you want to look at the VIX. So here's a little jewel that I'm going to leave y'all with. You want to try to buy your options when the VIX is low. And you want to sell them when the VIX spikes because that's going to raise the premium. Okay? This is your brother in trading and investing. Okay? Make sure you are signed up for my $500 contest. We are still giving away $500 when this channel reaches 1,000 subscribers. Okay? Keep an eye out for the $500 challenge update. Okay? And thanks for stopping by. Peace.